What's up, YouTube? Have you ever gotten stopped out by just a few pips in your trade and then price immediately reverses back up and hits all your take profit? It's one of the worst feelings. All of us traders experience that. And this isn't an accident. This isn't by coincidence. This is called a liquidity sweep. Let me explain how it works and how to actually use it to your advantage instead of just getting stopped out by it over and over again. First of all, let's describe liquidity. Liquidity is where a bunch of order lies, typically at a specific price point, whether it's in supply and demand zones or actual highs and lows, which is what we'll be talking about today, and which is what I use in my trading. So these are areas where market makers and institutions, they need this liquidity to fill their massive orders. These banks are placing orders of thousands of lots, and which means they need thousands of other retail traders like us to place trades in the opposite direction. So that's exactly what happens to you when you get your stop loss placed. You become liquidity for those big banks to place their orders in the opposite direction, which is why you typically see that when your stop loss get hits, it might reverse and go back up to your take profits. Those are big money. That's smart money riding your trade all the way up to where you wanted it to go. Now, I want to show you guys examples of this on the actual chart. We're going to use EU for this. Now, I'm on the 1 hour time frame, but you can find liquidity anywhere from the monthly time frame to the 1 minute. There's liquidity everywhere. Now, whether how much it'll react varies obviously per time frame. A daily liquidity sweep is going to hit a lot harder than a 5-minute liquidity sweep, but regardless, this is going to be my ranking of all the different liquidity sweeps and which ones you should care about more. Now, firstly is going to be session highs and lows. These are going to be the most effective because these are places where fellow retail traders like us are also looking for areas to get in and out of their orders. And ergo, since it's us looking for areas to get in and out of orders, it's also big banks. So there's not really a specific reason. It's just a overall unwritten rule. Everybody kind of agrees on it. So that will be our first one. Secondly is going to be equal slash relatively equal highs slash lows. Now remember, we're going to be looking at all of these on the actual on the actual chart, so don't get too mixed up just yet. But those are going to be points where pretty self-explanatory, where you have equal highs and lows. So you'll have two highs that are relatively close and they hit the exact same at about the same price. If it's 1 or 2 pips off, it's not that big a deal. But if they're the exact same, those are the strongest. And lastly, are going to be the ones that you'll see most often, which are just normal highs slash lows. And that's also pretty explanatory. Just the highs and lows that you see on the chart. Now, how good you have to get at pointing them out, that just comes with time. Maybe when you're beginning, you'll point out a spot that isn't really relative, and other points you'll be ignoring a lot of relative spots of liquidity. So it takes practice. You're not going to get it on the first try. But let's hop into the charts and show you where you can actually find these. Starting with session highs and lows, me personally, it's just so much easier to just use an indicator for this. So I use FX market sessions. You can find one whether you trade forex or not. Crypto stocks, you can find session indicators for all of that stuff. But for me, this is the easiest way to point it out. So we'll go back a couple days. We'll start right here. So you have London and New York session highs and lows right there. You have Tokyo session highs and lows right here. Boom. You have New York session highs and lows right here. Boom. And London, I'm not going to mark it. Usually, you'll also find this. I don't like to mark out the high or low of the session if it's at the end or the absolute beginning of the session. I like it to be right in the middle. Like you can see with this London high, it's right in the middle of London. It's a nice, healthy high. It looks good. You can see it on the chart nice and easy. Anybody else looking at the chart can see it nice and easy. It stands out to you. Those are going to be your strongest areas of liquidity. So, for example, technically, for this London session, you can see that the low is right here. But is that really a prominent low? It's not. Not a lot of people are going to be marking that out. Not a lot of orders are going to be getting filled there because it's not as prominent and as strong. Now, with this one right here, you can see this New York session actually gets acted on in Asia session. New York made the lows, came up a little bit, and then during Tokyo session, we came down and swept it and went on for a ton more. So that is how you find the session highs and lows. Next one on the list is equal highs and lows. Now, these are going to be a lot harder to find on higher time frames. At least that's what I see often. On the 5 minute, 10 minute, 15 minute time frame, you'll see them a lot more just because there's more price action to work with. And oddly enough, it happens more often. But I did find one on the 1 hour to show you guys. You can see that it even got swept and played out. Now, these are not exact equal lows. So if I scroll in really far here, I have this piece on TradingView. I'm not sure what it's called, but it marks out the lowest low, and you can see right now it's 1.13. And if I zoom in to just this one, it's 1.135857. Now it's 1.13861. That's 4 pips, and we're on the 1 hour time frame. It's really not that big a deal. So you can see over here that it did actually play out. We swept this liquidity and started heading back up. So that's the best example that I could find. Again, you'll find these more on the 5 minute, 10 minute, 15, maybe 30 minute charts a lot more often. But these are extremely strong areas of liquidity and they do work very well. All right, last but not least is normal highs and lows. Now, these are my favorite to work with because you see them so often and they work just as well as the other one. Session highs and lows are good too, but again, the chances that maybe your trading window, the chances that price actually sweeps those areas are relatively low compared to how often it'll sweep just a normal higher low. So I can mark these out pretty easily, and again, you'll get better at marking these out as you use them more often. But you can see right here, normal low, and price clearly swept it, and price clearly went off of it. This is actually the trade we took today. Go back and check out that trade recap. I posted it before even filming this video, so you will be able to see it live on the channel right now. Go check that out. I took this trade today. It was a banger of a trade. I can find a couple more. Let's move down here. We got one right here. We got another one right here. Right there. We got another one right here. Now, I'm looking at only buy side because I can just see that price is clearly trending up right now, but you can probably find some on the sell side as well. Maybe we go up here. Now, this was a news candle, so usually I don't mess with those, but still valid. You can see that price came up, swept in, obviously shot down. And we can even find another one right here. Swept, made the high right here, swept there, and ended up going down. And we can go on forever. But I want you guys to practice this on your own. Take out that session indicator that I showed you. Find 5 areas where you had a higher low that actually swept and it actually played out, and price ended up going the right direction after. Same thing with equal highs. Do 5 equal highs slash lows. Find them. Find price reacting to them, and then lastly, do 10 equal highs or 10 normal highs and normal lows. Do this. Get that practice in. If you don't already have a TradingView account, make one, find the liquidity. You can even copy my template. You can see I have them purple thin with liquidity up or down on the side, so it tells me if I come back later to the chart and I forgot which way it was going. And just do this, get the repetition in, start adding it into your trading strategy, and you'll see how much it benefits you. All right, guys, that's going to be a wrap up for this tutorial on liquidity sweeps. I hope you guys enjoyed it. Drop a comment if there's any other work that I didn't cover that you'd like to see on liquidity sweeps or on any other confluence in trading. And then before I close out, I just want to say that never blindly sell or buy these. These are not the only confirmation that you should be trading with. This is not the only confirmation that I trade with for sure. And wait for the sweep. add some confluences after that, back test the strategy. I'll be showing you guys a tutorial on how to back test in the future. But yeah, use liquidity as a confluence, not a signal by itself. And I hope you guys enjoyed. We tapped on session highs and lows, we tapped on normal highs and lows, and we tapped on equal highs and lows. And I hope you guys end up using this in your trading and let me know how it goes. I will see y'all in the next one.